Hello, I'm Annabelle Gonzalez, non-resident senior fellow at the Peterson Institute for International Economics. And I am very pleased to welcome you back to TradeWinds, our virtual event series where we discuss the future of global trade and investment in a changing landscape with top policymakers and experts from across the world. Thanks to all of you for being here. Your participation, which now comes from 105 countries, is very important to us, so please keep coming. Let me also take this opportunity to invite you to our other virtual event series at the Peterson Institute, Financial Statements with Nicolas Veron and Global Connections with Caroline Atkinson. They're both great, so please check our website for details on the next sessions. This is our fourth episode of TradeWinds in 2021, and we will discuss today how can increased openness to trade and services support a strong economic recovery, a topic in the minds of many policymakers as they fight the devastating impact of the pandemic on most services sectors, at least those requiring physical contact between consumers and suppliers. Our conversation today will be led by two outstanding trade economists who are also top experts on services trade. Let me first introduce Mariam Jansen, who is Director of the Trade and Agricultural Directorate at the Organization for Economic Cooperation and Development since September last year. Mariam has a very distinguished career in international organizations. Before joining the OECD, she was the Director of the Division of Market Development and Chief Economist of the International Trade Center in Geneva. She was counselor in the Economic Research and Statistics Division of the WTO and head of the Trade and Employment Program at the International Labor Organization. Mariam has lectured in multiple academic institutions, including the World Trade Institute and the University of Geneva, and has published widely on many topics, including services liberalization. Mariam and I also share a passion for promoting trade and gender, which at some point led to a publication to which we both contributed on women shaping global economic governance. I am also delighted to welcome Aditya Mattu, who is Chief Economist of the East Asia and Pacific region of the World Bank, and who is back from India in Washington now. Aditya specializes in development, trade, and international cooperation, and provides policy advice to governments across the world. Aditya was co-director of the World Development Report 2020 on global value chains. Prior to this, he was the research manager on trade and integration at the World Bank, where we had the opportunity of working together. Before he joined the bank, Aditya was economic counselor at the WTO and taught economics at the Universities of Sussex and Cambridge. Aditya is one of the most prolific writers that I know of, having published extensively on development, trade, trading services, and international trade agreements. I have to confess that I tried to count how many publications Aditya had just on trading services, and after a while, I just lost count. So welcome to both of you, and thank you very much for being here with us at TradeWinds. I will turn to Mariam and Aditya in a moment. Just a reminder to our audience that, as usual, please get ready to submit your questions using the Q&A feature in the platform, and we will try to get to as many of them as possible. So we know that trading services can help economies achieve more rapid growth. It can also support export diversification, facilitate trading goods, connect supply chains, and enable digital supply and e-commerce. Importantly, services trade can drive productivity gains as domestic firms have access to more competitive telecom and financial services, and workers can benefit from high-quality education and health. Services trade can also improve the welfare of the average consumer and positively impact jobs and wages, in particular for women who are largely employed in the services sectors in many countries. Before the pandemic, trading services had been expanding faster than trading goods, at a rate of 5.4% year per year on average between 2005 and 2017. According to the WTO 2019 World Trade Report, when commercial presence in another country is accounted for, trading services was worth $13.3 trillion in 2017. While advanced economies are the major participants in services trade, the contribution of developing countries to trading services grew by more than 10 percentage points between the years 2005 and 2017, though mostly concentrated in a handful of countries. And then came the pandemic, and global services trade collapsed, with a 30% year-on-year decline registered in the second quarter of 2020. While it has improved since, preliminary data from the WTO suggests that in November, services trade was still 16% below 2019 levels. One estimate shows that at least half of services trade, that is nearly $7 trillion, easily stands compromised by COVID-19, and prospects for recovery are still uncertain. Now, it is not only social distancing that has impacted services trade and investment. The introduction of new restrictions by governments, for example, tighter investment screening mechanisms, have resulted in a deterioration of the global trading environment, even while some countries lowered barriers to cross-border digital trade. Barriers to trading services are on average much higher than those of trading goods, and they're difficult to tackle as they are embedded in regulatory frameworks. Lack of fresh initiatives for global services liberalization has not helped either. So amid all of these challenges, to revitalize trading services for a strong, inclusive, and sustainable recovery of the global economy, governments need to take national and concerted actions. So let me now turn to you, Mariam, and again, thank you very much for being here. The OECD recently published its Services Trade Restrictiveness Index report, a tool that identifies, catalogs, and quantifies cross-cutting barriers affecting services traded digitally in 46 countries. So what are the main findings of the report?
Thank you, Annabelle. Thanks for the introduction. Thanks also for bringing up this pleasant memory of the book on women governing global economics. So yes, we just recently, a few weeks ago, we launched an update of our Services Trade Restrictiveness Index. This update includes now data until October 2020. So a lot of the measures that were introduced during the pandemic are already included. Although we don't include everything that has been put in place during the pandemic, and I will say something more about this. This is a database. These are data we have been publishing for a number of years. They cover 48 countries, and they cover multiple service sectors, not only digitally traded services. Now, what do we see in these data? We see a continuation of the trend that restrictions to services trade are increasing. And what is, I think, more worrying is that in 2020, the pace of tightening has increased. So we saw an uptake, even a more rapid tightening than we have been seeing in previous years. This trend is mainly driven, and you already referred to this, by new policies in the area of what we call as service exports mode 3 and mode 4. So it's restrictions related to travel, to cross-border travel of persons, and it's restrictions related to investment, to foreign direct investment. Let me say a bit more about this. We have included in this database data restrictions that have been introduced in 2020, but not those that have a limited time. So if a travel restriction was introduced from September to November, that would not be in the database. But we do see that in a number of countries, visa procedures become more cumbersome, become more difficult, and that this is done in a way that without an end date. So we expect that these kind of measures can be there for a longer time, and that's definitely something we think that that policymakers have to watch out for. We do know, and some of us have experienced this in person, that these restrictions make traveling, tourism, holidays more difficult, and a big part of that collapse in services trade that you mentioned, referred to, is due to a reduction of in tourism and travel. But our research has shown that restrictions to cross-border movements of people also increase the cost of all other services trade. So on average, we expect that in a 3-4 years time, if travel remains restricted, the costs of services trade for other services, be it architectural services, accounting services, or other type of business services, it will also increase. So this is not just a tourism problem. This is a bigger services trade problem. I expect this is also a problem for goods trade, but it's not something we have measured so far. So we have seen an uptake in more restrictiveness in visa procedures, in particular for business travel. What we also see is, and you mentioned this already, increased screening of foreign direct investment. Sometimes existing rules have been tightened, other types new rules have been, new restrictions have been introduced. This is a trend that we were already observing before the pandemic. That's not entirely new, but the pandemic has probably sharpened this for at least two reasons. One is that increasingly now companies that are in financial problems, so there is a concern that they may be up for grab and that foreigners may want to buy them, and there's increased concerns that this may not be in the interest of the national economy. And another concern is that there may be investment in sectors that are considered essential. This is a topic, a term that is coming up a lot now. What is essential? But here we are above all thinking of the health sector now, and where maybe governments may want to have a certain type of control. Now, I don't want to say whether this is good or bad, but this is the kind of motivations that are driving this this process that we are seeing. So this is something, both of these things are things that we consider to be of concern, and they are also phenomena that may not disappear in the short run, not only because these measures do not have a deadline at the end, an end date at the end, but in particular in the case of foreign direct investment, because these are a continuation of a trend that we were already seeing. And in the case of travel, because we think that this issue of how do you prove that you are fit for travel in the aftermath of the pandemic or an ongoing pandemic, we think this is something that may be here to stay for a number of years and may not be going away immediately. So I would, however, want to bring after this sobering message also some positive, some light to this tunnel. We have been seeing some increases, improvements in the restrictiveness of measures in everything around e-commerce and digital trade. There we had seen in the past a trend of increased tightening, and there we have seen that governments have facilitated in 2020 that type of services trade. And I think that's very much in order to keep things flowing, in order to keep the economies running. There was definitely a sense of governments that e-commerce, digital trade can help and can make it easier for us to come through this pandemic. So at this stage, things are not looking rosy, but I would like to end with this positive note. We have seen facilitation where governments saw the direct use for this. That's not the only positive thing we have seen. As every year we highlight in this report who are the top performers in terms of openness for services trade, but also who are the top reformers. Among the top performers, you will find countries like the Netherlands, Latvia, Czech Republic, Japan, UK, and Lithuania. Top reformers are countries like China, Brazil, and Iceland. So these are typically countries like the case of Brazil and China, where the current regime is not necessarily very liberal, but where we have seen a significant change, where we are seeing a movement in the positive direction. And by highlighting this kind of changes, we would also like to encourage countries to move further in this direction and to further liberalize services trade. I would like to leave it here, and I look forward to listen to Aditya and to the coming discussion.
Thank you. Thank you very much, Mariam. I think, very sobering findings. Let me turn now to you, Aditya. Last year, the bank and the WTO issued a new services trade policy database with information on the services trade policies in 5 sectors, right? In financial, telecom, and professional services, distribution, and transportation, for a large cross-section of economies. So in your view, how can trade policies help revitalize trading services and support economic recovery? Welcome, Aditya.
Thank you, Annabelle. Thank you, Mariam, for that excellent overview of your new report. Annabelle, if you allow me, I'm going to use a few slides, and I'm just going to take a slightly broader view before I come to your precise question. So the first striking thing about this period is that the nature of services globalization has changed. You know, Richard Baldwin wrote this book a little while ago called Globotics, where he predicted how the whole digitization of services was going to change the world. In a way, COVID-19 has acted as a powerful accelerant on that whole trend. And if you look at what has happened to trade in services, you'll see that, as you said, transport, travel, construction, these are the services which are less data intensive, less conducive to delivery, and they have contracted dramatically. But in the midst of this general economic carnage, telecommunications, information communication, and a range of business services have continued to grow. Now, we all know the reason, that when you couldn't do face-to-face transactions, both firms and households invested in digital technologies, both computers and skills. And once you make those investments, the relative cost of transacting domestically and internationally becomes virtually the same. And moreover, these are sunk costs. You don't unlearn your skills and you don't sell off your computers. So this is going to be durable. So this is the first big change that I think we are going to see, a change in services globalization. And this is exactly as Mariam said, traveling face-to-face will diminish, but this other change. But domestically also, we are going to see serious disruption. Now, this is a very nice study by my colleagues, Jonathan Timmis and Tim Stefano, which looks at what has happened during and it's an event study, and you see there is a big boost in e-commerce adoption, which was always growing in about the aftermath of the crisis, but not just e-commerce, which is very visible, but a lot of sophisticated services activities like data analytics are also increasingly being digitized and have increased. Now, why does this matter? Because I think this disruption has two sides. First of all, it has been a really powerful lifeline during the whole crisis. When you think of how we communicate, how we distribute goods and services, how we conduct financial transactions, how we get delivery, how we get entertained. If we hadn't had these developments and services, then life would be much more miserable and productivity got a much bigger shock. But it's also important to remember that all these services now are operating at the periphery of traditional regulation. Whether you think of financial payment services or the digital communication services, or in fact the Ubers and all this, the whole class of this thing is disrupting the conventional distribution network, the conventional transport, conventional banking. It's a kind of new informalization of services production. And it's a new mode of production in a sort of in the broad Marxist sense, which is going to change the nature of production relationships. It's changing the nature of the employment contract. So I emphasize these two things: much greater tradability and also much greater domestic transformation. Now, what does the policy world look like? So we are not one, but 4 steps behind the OECD. So this is a 2016 picture. And I should also thank Mariam and her colleagues for making available a lot of the data for the OECD countries. But what you see in the picture is that this puzzling fact that some of the fastest growing countries in the world, and this is part of my current responsibility, which is East Asia, as well as my origin, tends to be the most restrictive parts of the world. And now they're either growing fast in spite of these restrictions, or there is some magical formula they've happened upon. But I think what I want to highlight is that these were the traditional restrictions for which one reason was vested interests. But another reason was legitimate, what I call regulatory precautionism. There is a real worry in this world that if you open up, you have to face greater risks in this age of insecurity. Now, what does that mean? And some of these things you already highlighted and Mariam did, that if people move across borders, you're worried about disease, you're worried about security. For cross-border delivery, you're worried about privacy. Now, for cross-border investment in infrastructural services, you have, let's call a spade, the Huawei problem, that this is the most efficient provider of services, but it provokes concern about its close relationships with the government. In financial services, especially in this period of distress, this whole question of what does it mean if you have foreign banks, how will it affect financial stability? Traditionally, developing countries, the shock originated there, but when the shock originates in industrial countries as it did in 2009, then this whole question of how much you can deal with these problems, I think sometimes creates a legitimate fear of regulatory inadequacy, not just at the national level, but at the global level. So I emphasize this because this then raises the question of how are we going to deal with these barriers? Can we just continue to negotiate as we have done? And I noticed Brad Jensen has this memo to the US, and it's a brilliantly written memo, and it talks about how we must revive CPTPP or TISA negotiations. But the fundamental fact, Annabelle, as you know, is that these negotiations have provided valuable locking in of reforms that have already taken place. For the most part, they haven't induced liberalization, except in your own country. I think when you were negotiating, I think the telecommunications and insurance sectors, you saw real change in policies, but that is an exception. So the traditional way of talking about liberalizing services or goods has been you open your market, I open my market. Further, within the EU and other places, and this is part of Brad's suggestion, you try and negotiate mutual recognition agreements. You try and deepen harmonization of regulation. So you say the second layer. But the problem is that I don't think this deeper layer is going to happen between, for example, developing countries and industrial countries. It's not even happening between the United States and EU, for example, in an area like privacy, where they differ significantly on what their approach is. So this new idea, or perhaps an old idea in a new bottle, is this suggestion that in this new world, we must think of these diagonal commitments where exporting countries promise to adhere to the standards of importing countries for what is delivered to importing countries. This is also the privacy shield, where the US said to the EU, we're not going to have the same privacy standards as you yet, but what we do is we promise to stick to your standards for your citizens' data. Now, you can easily think of this being the challenge in mode 4, people movement, that we somehow certify, promise. Already there's stock of, for example, vaccine passports. But again, it's the exporter. Think of it also in the Huawei situation. Somehow the challenge is for China to commit to ensure that its providers abroad have an arm's length relationship with the state and will behave purely on commercial considerations. And if it is able to make that commitment, the reciprocal commitment is we are going to allow investment, we're going to allow data flows and so on. So I think thinking about how this new model can work, I think is going to be important. But in parallel, we do need to think about the tax issue, because the disruption that I just described is going to create new challenges. Already tax rates on the rich, on corporate sector were plunging, and the middle class was bearing the burden of taxation because it wasn't able to run away to another jurisdiction. I think services and intangibles basically exacerbate this tax evasion problem. And we need to think harder, again, just as I was thinking of destination country regulation, destination country taxation of the kind, again, Mariam's colleagues in the OECD have already been thinking about. And I think this is necessary to ensure that when you have globalization, the state retains the resources which are needed either to compensate the losers, especially in the industrial countries, and to invest in the hard infrastructure and the soft infrastructure in developing countries. So to benefit from it. And the final point I'd like to make is that another grim side of this crisis, I've celebrated the positive, the negative is the inequalities that are going to grow. This is a picture of how much harder in Philippines, Laos, PDR, Mongolia, the poor have found to keep engaging in education because they are less equipped with connectivity. So here again is a sector where we have seen increased inequality because of the unequal distribution of broadband access or internet access in the first place. There is potentially a virtuous cycle. Health and education have resisted globalization, again, partly because of vested interests, but partly because of legitimate regulatory concerns. If we can think of the approach we have defined, then we can harness globalization to democratize education. This elite being educated by the elite in single classrooms or in special universities, we could transform that and make knowledge, learning much more widely available. And that again could be something that is necessary to participate productively in services trade, because nothing matters more than human capital. Thank you, Annabelle.
All right, thank you very much, Aditya. You make three great points that I wanna come back to them in our discussion. Let me first ask both of you one question, which is that, and both of you have referred to this point, amid the lockdowns and the other containment measures that have been adopted by governments to restrict the movement of persons, we know that the accelerated adoption and use of digital technologies have kept trade flowing. So, and there are different estimates out there, but one of them suggests that the growth in global e-commerce since March last year has doubled from the previous period. So the question that I have, and I'll also bring in a question from the audience, is how can governments leverage this boom to promote even faster growth and trade? And we have a question from Mia Makik in our audience, who says, could access to digital technologies neutralize the restrictions on movements of providers of professional services that Mariam was referring to? And how can current regulatory distances, or how is it that current regulatory distances in the digital area may prevent this positive role of technology? So, Mariam, let me turn to you first and hear your views on this.
Thank you, Annabelle. Thanks for these questions. So I think we have already seen some movements in the direction of taking advantage of this new situation. For instance, when it comes to procedures at the border for exporting and importing, the kind of issues we in the trade community often refer to as trade facilitation measures. There we have seen a very interesting rapid move into an increase of digital tools. We had known for quite some time that digitalizing border procedures makes trade easier. Interestingly, also, it makes trade more gender neutral. We have found that for women, it's easier to get their products through the border when they deal with digital processes than with paperwork and face-to-face discussion. So we had known this for some time, the potential of digitalization at the border, but we have seen now a radical shift in this direction, very much because that was the only way sometimes to keep trade flowing. So that's something where we hope that we will see a somewhat permanent shift there, because those processes that have been introduced, digitalized, they will stay digital now. Now, can we replace through these digital technologies the lack of travel? Personally, I think there are two aspects we have to keep in mind. First, Currently, for a number of countries, travel and tourism really, transport and tourism really represent a bulk of services trade. I think in the European Union, it's 1/3 of services trade. In a country like your home country, it's half. And other OECD member like Colombia, it can be up to 3/4 of the services trade. Tourism is not only a very important part of services trade for some countries, it's a very, I call it people-centered and type of trade, type of activity. It has a high employment intensity, which is less the case for digital activities. It's different types of labor that you are looking for. So you can, in my view, not just expect digital activities, IT activities to replace in terms of value or volume of trade, but also in terms of employment easily what tourism has been holding in the past. So there will definitely, at the very least, there would be a difficult transition period. Can business travel can it be replaced by digital activities? We hear from business that it cannot. So we've heard from business already at the end of 2020. Yes, we can keep on going for some time, but after, in a few months' time, we will need to visit customers. We will need to go and repair a machine. We will need to meet face to face to do the difficult talks and the difficult negotiations. And this comes from business active in goods trade. So I do think there are opportunities. I do think that governments have already started to reap them, definitely when it comes to border processes, but also if we are seeing modernization within the domestic economies at a more rapid pace than before. But this will not come without transition costs, and a pure one-to-one replacement, I do not think that we are going in that direction.
Mm-hmm. Thank you. Thank you very much, Mariam. Aditya, your views on this?
I think Mariam has already given a thoughtful answer. I'll just say three things. First, it is true, Annabelle, that the digitization, in fact, has made significant amounts of traditional protection redundant. You know, a lot of these regulatory requirements, qualification requirements, licensing requirements have meant that, you know, for example, in professional services, trade has hollowed out the scope. There are lots of intermediate tasks when you think of architecture. Designs are made in Colombia, and even though the final stamp cannot be approved, has to be provided locally, I think that has made it much more feasible to have trade where there wasn't trade. Similarly, the flip side is countries like India restrict foreign investment in retail, but there has been a de facto hollowing out of that restriction by other forms of presence, other forms of digital delivery, which are circumventing the traditional restrictions. So there's no doubt that that has already made more trade possible, but I agree with Mariam that ultimately people moving is really important, both to deliver services, but also for the kinds of things that Mariam mentioned. There is research which shows how this actual physical travel is a powerful catalyst for trade, for investment, but also innovation. There are interesting results which show that how skilled people moving actually leads to positive increase in patenting. So that's the first point. The second point is, I think, on the regulatory distance point, which Mariam was talking about, there's no doubt in my mind that we'll need cooperation beyond trade to keep trade open. I mentioned some of these areas on the digital dimension itself, the question of privacy, the question of cybersecurity, but I also think that relevant regulatory distance encompasses, for example, competition issues. I think the tensions between the EU and the US on digital service providers are really different views on a regulatory dimension to how much scope there should be for certain types of services being provided by what kind of provider. And similarly on taxation, I think that's going to be an important source of friction. So those things need to be addressed to keep trade flowing, but also because it's desirable in itself. You don't want consumers to be exploited, you don't want resources to be eroded, and you don't want financial instability or cyber crime. So I think for those reasons, that parallel process. And finally, even to get around the COVID shock, which I must say, unfortunately, the vaccines will not be a silver bullet. It won't end for a while. Developing mechanisms for cooperation on both the substantive allocation of vaccines, but also mutual recognition or recognition of what kinds of health systems are adequate to facilitate mobility is going to be important.
Thank you very much. These are excellent points. I want to go back to the new model of negotiating services trade, Aditya, that you were referring to, and that is something, of course, that our colleague at the Peterson Institute, Brad Jensen, has also been looking at. How do you think, Aditya? There are two things that worry me in this context of the new model. The first one is, will exporters in exporting countries have to deal with a multiple complexity of different regulatory regimes when exporting to different countries? And will that bring additional cost to trading services, which we know are already very high? So that's one question. And the second question, and it's also one question that Carlos Braga brings in our Q&A section, is how would your suggestion to address services negotiations, the regulation versus the trade restrictions, work in the context of the GATS architecture? How do you think this could work? Because it's more clear, I think, at the bilateral level. And even there, as you rightly pointed out, it has proven to be very challenging, including for countries at the same level of development, say the US and the EU countries. But how would this work at a multilateral level? And Aditya, I maybe start with you and then I move to Mariam.
I think those are both fair points. If I can give you one example, Philippines several years ago decided that it didn't want to have to jump through all the hoops created by the European data privacy regulation, and therefore they would enact a domestic privacy law, which was comparable, which would be deemed adequate by the European Commission. The moment they started doing that, there were American firms based in the Philippines said, but you're going to increase the cost of doing business so much for us that we are going to leave. So I think you're pointing to a fundamental problem that when there are large countries with different regulation, it is very hard for providers to, exploit either regulatory or production economies of scale because you have to cater to different jurisdictions. Now, how much you can walk on different legs for different jurisdictions is always going to be costly. But I'm describing a second best world. Annabelle, you only get rid of this multiple regulation problem in a world where either there is sufficient convergence that you are willing to, or you're willing to tolerate some divergence and mutually recognize. Now, for example, air transport services, there has been a consensus that there are certain goals and they can be met through different forms of regulation. So in the absence of that convergence or mutual recognition, I'm thinking of a second best world where a country like India, for example, has incurred significant costs of compliance because they are trapped in this. And there's a development dilemma. I described the EU versus US dilemma. So you can get premature harmonization. Because as an economist, if you think of privacy, it accentuates the asymmetric information problem, which means that banks, for example, credit bureaus cannot operate, and credit bureaus are necessary to improve access to finance. So if a developing country says that, look, we're going to have very strict privacy law, it could compromise access to services. So there is again that dilemma. You want to improve access to services domestically for your people, but you also want to improve access to foreign markets for your firms. And those are two different goals which can conflict, because if you prematurely raise your standard, you can't do the second. So I think ultimately in this transition period, this idea of exporters making destination specific regulatory commitments seems to me a way of preventing these dilemmas from undermining other legitimate development goals. On the GATS architecture, I should say, and this is something actually that Julia Nielsen said to me a long time ago when we were speaking about this, that much of this could be cast as additional commitments under the GATS, where you say, now they're not discriminatory, but you can say, I am willing to allow access to my markets to any exporter who satisfies me in these respects. And then exporters could self-select. So the condition is non-discriminatory, but exporters can decide whether they are in a position to meet with those conditions. And then there is a powerful defense, which is the MFN provision and the GATS rule, which says that once you allow that to any one exporter, you're obliged to give others the right to demonstrate that they have substantially the same conditions. And that's why I think the Privacy Shield offers that fulcrum which can be leveraged by other developing countries to try and take advantage of it. So a combination of the additional commitments to allow, subject to meeting regulatory standards, and using the MFN to multilateralize.
Thank you, Aditya. Very, very interesting indeed. And again, I will come back with you specifically later on what's going on in the WTO. But I'd like to hear from Mariam as well. And what do you think? How can countries work together to foster greater opening in services trade liberalization? Do you think this model is a good idea?
Well, let me maybe build on what Aditya already explained, and let me maybe start by saying that some of the things we are hearing here are things that are not entirely new to the world of trade and not entirely new to the WTO. For instance, this development trap that you mentioned, Aditya, I remember talking about this in the context of SPS measures and agriculture 10 years ago. So it's saying currently we have a situation where African exporters have to choose, am I going to meet the SPS measures of Europe or the SPS measures of the United States? Many of them will not be able to pay for meeting both of them. You need two different production lines. And in either case, both of these requirements may be too high for what you would like to have in an LDC or in a developing country. If a country that has to make the choice between being able to feed its people and let's take something, maybe animal welfare or other issues related to the environment, you have a different trade-off in a country where access to food is a problem than you would have in my home country, Germany, where everybody has enough to eat. So the balance, where do you want to put yourself, is different. Now, so we know, we have learned maybe from the past in SPS, to less extent TBT, what the challenges are and how we have to think about them. And maybe I would advise service providers to look at what has happened there. One important thing, one important problem that we have encountered in that space in the past is the lack of representation of developing country experts in standard setting bodies at the international level. So the voice of the developing world was not heard. And there we are seeing very interesting developments. The new head of the ISO, the International Standard Setting Organization, is African. So not only is Africa represented in the bodies, Africa is leading. In the services space, you have been seeing very interesting things where a country like Rwanda was an innovator on regulation for drone transport. So we are seeing developing countries being more proactive in the regulatory space and even being daring to be an innovator. And I can only encourage countries to do this, in particular in the digital space, because one difference between SPS, so regulation in the agricultural space, and regulation in the digital space is that industrialized countries have been regulating food for centuries. I think one of the oldest existing regulations is the beer regulation from Germany. I think it's one of the longest traditions that exists, whereas digital regulation is new for Germany, is new for India, is new for Rwanda. So we are, all of us are starting this or have been starting this a number of years ago. It's an opportunity to discuss regulation together. Because, and that's what Aditya referred to, we are, if we do not converge somehow, we will remain in a second best situation. Aditya makes a proposal for a second best solution, but I would like to maybe encourage people to consider the first best an option, in particular in this space. We are all discussing and thinking about regulation at the same time. We have a unique opportunity here that we didn't have in the past in agriculture and in manufacturing. If in the next parts of the discussion we can come back to the issue of competition and taxation, I would be very happy, because I would like to make some comments on these aspects, these important aspects that Aditya raised.
Thank you very much, Mariam. Yes, and I want to come back to them. Before doing that, I want to come back and see, so what role for the WTO in this particular area of fostering access to services markets? Because we know that there are at least potentially three negotiations in the WTO related to services right now. One is, of course, on e-commerce, and we know that some of the challenging issues that we're discussing from a regulatory perspective are actually making negotiations difficult on that front. Then we have another negotiation of a joint statement initiative on domestic services regulation, which is a very sort of low-key but very interesting negotiation, trying to bring some discipline to the adoption of regulations by countries. And then, of course, we have the negotiations of the Trade and Services Agreement that were suspended some years ago, I think 2016 or 2017, but that involved a relatively small number of countries, but large in terms of participation in services trade. And I wanted to ask your views, and here I also take inspiration from a number of our participants, Kent Jones, for example, Hildegard Kivik Nordas, and others. So what do you think about this negotiations at the WTO? What are their prospects? Mariam, can I start with you?
Well, I'm a fan of this low-key negotiation that you referred to, the joint initiative on domestic services, domestic regulation. That maybe simply reflects that I've been working on domestic regulation in different fields for so many years. But I do think that there is real potential there, and that would also reflect the point of view of the chair of those negotiations, who is, I believe, from Costa Rica, I remember well. Those negotiations focus on the role of transparency and predictability of processes, in particular around any issues around licensing, and we do know from work also in the goods space that transparency and predictability are huge cost savers. So I remember in a previous position at the International Trade Center, we would be working with companies who said, I don't care what standard the importing country set. My problem is that I often don't know what it is. Mm-hmm. And I often do not know what I have to do in order to meet that standard. Mm-hmm. So I therefore expect that the cost saving potential of a positive outcome in those negotiations is significant. And I expect that there is potential for a positive outcome there, because we are dealing with relatively non-polemic issues that have already been accepted as cost savers and as compromise areas in other fields. That includes, for instance, the trade facilitation field. So that without wanting to diminish the importance of the other two initiatives, I do really, I'm very hopeful for this particular part of the ongoing discussions at the WTO.
All right, thank you very much, Mariam. Aditya, your take on the WTO negotiations in this area?
So, Annabelle, first I must confess that I have not been following these negotiations very closely recently. I have, I was aware of what was happening in the Trade and Service Agreement and broadly on the e-commerce. I think the big hole always in services negotiations has been this question of licensing and domestic regulation. When you think of the structure of the GATS, on the one hand, you have negotiated all these commitments, and much blood was spilled negotiating these commitments, but they coexist with exceptions provisions. There is, for example, in financial services, the prudential carve-out. It's never been tested what the scope of the prudential carve-out are, but there are other similar provisions. But it raises the question of how much freedom do regulators have to exercise discretion? When you think of, for example, the US concerns about access to the Chinese market, most of them relate to the idea that somehow the regulatory discretion in licensing has not translated into the kind of openness, the de facto openness that was de jure promised to in the commitments. Now, I do think the Trade and Services Agreement was trying to get to that problem, and there are some very nice new ideas. But it is also true, Annabelle, that when you compare what comes out of trade agreements, even the gold standard TPP or the CPTPP, when you compare the bindings with the applied policy, for the most part, except in a very few cases where in the context of the negotiations themselves, say in Mexico or Malaysia, you had changes in policy, that the agreement hasn't really been a powerful instrument for liberalization. It has been a very important instrument for creating greater predictability by locking in policies. So I think that challenge of how do you limit regulatory discretion without taking away the kind of necessary regulatory autonomy is a central issue in services agreements. And I feel that that's what you need to come to terms with, especially in a world when you think of what's happening. And this is, when you think of the telecommunications infrastructure of the agreements and commitments, but you and I don't use that anymore. We are all communicating via WhatsApp. When you think of the whole structure of financial services, it's the digital providers which are competing for payment services, while the traditional banks, and that's also something worth thinking about, it's a separate point and a distinct point, but just think of the tension between the old that we spent our time negotiating, which is the traditional bank. The traditional bank is in deep trouble. One, because it's being used as a conduit to extend support and will emerge from this crisis with lots of non-performing loans. And at the same time, its most profitable business, which is payments, is being increasingly appropriated by digital providers. You think of transport and you think of Uber and all these other ways of providing services. You think of distribution and how that whole traditional set of commitments on retail, wholesale are being completely turned on their head. So I think one of the questions that we really need to think of is how far this architecture is suited for this new world, which in fact is creating new modes of production. This used to always be a problem in accounting services, for example. The WTO spent a long time negotiating accounting disciplines, but it wasn't clear what mode the accounting services sector used. Because when you have these networks and partnerships and so on, it wasn't really clear commercial presence. It wasn't cross-border trade. It wasn't mode 4. It was more like a franchising agreement, which it wasn't clear. I think that is becoming more and more like the norm across different areas. And I think grappling with both this changing mode of production, which operates at the periphery of conventional regulation and circumvents many of the conventional barriers, I think that is an intellectual challenge that we should all think about.
Yeah, you're absolutely right. In that context, one idea that I've been thinking is that as technology impacts modes of production and policies are drafted, regulations are drafted across many countries, one question would be whether greater dialogue in the context of the WTO, following sort of like this idea that Mariam was saying that, in terms of the countries have been grappling with these issues in the context of standards on sanitary, phytosanitary standards and technical obstacles for many years. So having a place where specific trade concerns can be discussed in the area of services in the context of the WTO in a mechanism similar to that of SPS and TBT could be like an interesting way, at least to begin to give some visibility to some of these challenges, because some of this may of course, protect legitimate objectives, but then at the same time, they may turn out to be barriers to trade, of course, as we know. But I guess that could, would take us in a direction that could, again, we could dedicate an episode to this. Before we leave, and we just have 5 minutes, I just want to come back very, very rapidly. I'm not going to come to the issue of competition because that would take a whole episode, Mariam, but I'm going to come back to the issue of destination country taxation and the negotiations going on at the OECD, and whether you think there is a possibility of finding some convergence there, which would address then one of these key issues impacting trading services, as Aditya was mentioning. So Mariam, your words on this, and they will be your final comments today. Thank you. Then I'll come back to you, Aditya.
Thank you, Annabelle. Well, I will use then the words that I used yesterday in an intervention at an agricultural event. And there I said, I encourage all trade policymakers to follow very closely what happens at the OECD in the area of taxation and to support the negotiations on this joint initiative around taxation. Yes, it's called taxation in the digital space, but it is important, I think, for all trade, and it is important for trade. Both Aditya and you have worked in international institutions. It's very rare that a director of one part of the institution makes publicity for the work of another director in another part of the institution. This is what I'm currently doing. And I'm doing this for the reason that Aditya mentioned. We need governments continue to have the possibility to redistribute, to finance the policies that they consider to be important for their country. I do believe that voters expect governments to have that policy space. And I do expect that some of the protectionist requests we have been seeing from voters, protectionism in terms of protectionism against trade, was actually directed towards this lack of space that governments had, for instance, in the taxation space. Everybody understands that I, as a worker, pay a tax, but the multinational doesn't. It's not acceptable for voters. So I believe that a positive outcome in the negotiations around taxation will increase support for a trade agenda and therefore support for the work we are doing in the Trade and Agriculture Directorate at the OECD. I very much hope that there is a positive outcome, and from the trade side, we are doing what we can to support the negotiations in that direction.
Thank you. Thank you very much, Mariam. Aditya?
Every time Mariam asks, I have to try and invent something superficial to complement her excellent answers. So now I think we're on the same page. I think they're very interesting questions, which, arcane pieces of WTO jurisprudence relating to how much you can offset corporate taxes. I think those questions, how much can you say, oh, because your tax rates are different from mine. I noticed, I think Paul Krugman or somebody recently made that proposal. I think thinking about how you can do that without creating a protectionist slippery slope. I think the same kind of questions are going to arise, for example, in the carbon content of, border tax adjustment. I think in each of these cases, there is a kind of strong case for border offsets to offset differences in carbon, differences in taxation, differences in all these things, but you have to be very careful that you can design them in a way that do not lend themselves to protectionist abuse. I think I just want to say one thing about your WTO. Both of us spent a long time in the WTO. What I feel sad about is that there are two modes. One is the urgent negotiation mode, where there's no time to think about the deep question. And then there is the hibernation mode, where there's no appetite to think about the deep question. Because such a period of inactivity could have been used really for powerful engagement, the kind of conversations that we are having. More knowledgeable and more influential people could have been part of that conversation. And we could have been prepared to take advantage of the thaw that might come now. But it hasn't happened. And, I think I'm really happy that you have organized this event. There are people who I've worked with in the past and learned a lot. I see Carlos Braga is there, and he was one of the leaders of the World Bank's involvement in the telecommunications negotiations. I don't know if Cecile Hoser is there. She's helped me think about what these new services mean. But I think, Annabelle, you're doing a valuable public service. And Mariam, When Annabelle was here, we tried hard to catalyze greater cooperation between the World Bank and the OECD. And I think it led to your colleague John Drummond's tremendously valuable role in helping us to develop our database and build on the nice work that Hildegun and others have done. But I would welcome similar deeper collaboration with Annabelle's guiding spirit with us. Okay, thank you.
Thank you. Thank you very much, Aditya. And thank you, Mariam, really for a very enlightening discussion. And of course, for our viewers, we know that TradeWinds is actually one way of exporting services. And as I was saying before, to 105 countries across the world. So it's an interesting world out there. And I really would like to end on this note of reflecting how can countries collaborate in the area of trading services? How can we promote global trade cooperation in services? Because I think the pandemic has really put this topic, clear and center. It was already very important, but now I think it's greater in importance, and global trade cooperation will become even more relevant. So thank you very much to our speakers, Mariam Jensen and Aditya Mattu, for this very substantive conversation. Thank you to all of my Peterson colleagues who support TradeWinds, and I want to also do a shout out to the work done by Brad Jensen in the area of trade and services, which I think is also very enlightening. Thanks to our audience for your continued participation. Keep coming, and please join us in our next episode of TradeWinds on Wednesday, March 17. We will discuss with Stormy Annika-Miltner and Martin Chorsempa whether the revamped investment screening mechanisms in advanced countries are a new form of protectionism or a policy tool to protect national security, a topic that is also very relevant to the discussions that we were having today. So until then, thank you very much and goodbye.
Bye, Annabelle, and thank you very much. Bye-bye, Mariam. Bye-bye.
Thank you.
Bye, Aditya. Bye, Annabelle. Thank you.